everybody. Today we are going to be dealing with two accounts. I have demarcated assets account into two portions. Now the first asset account, it is of the non-current assets, of which is been known as long-term assets. Then the non-current assets or the long-term assets increases on the debit side and decreases on the credit side. We also have another asset account, but this asset account is a current asset. And then the current assets, we are going to be using bank account as our current asset. Now the current asset is a short-term assets account. Now our bank account or asset account increases on the debit side and decreases on the credit side, similar to the non-current assets. But the non-current assets, you have to know that these are the assets that will be used for a long period of time within the entity or the enterprise. Now, the current assets, it is our bank account of which can also be utilized and being classified as a short-term asset. Now, on our debit side of our non-current assets, we are going to be recording the assets that we are purchasing within our business. Every time when we buy an asset, a non-current asset, we are going to be debiting our non-current asset account. Which side? On our left-hand side, the debit side. So let us just go and make some examples on how to buy assets, and then you are going to be recording that particular asset that is coming into your business. On which side? On the debit side. Check the arrow. The arrow, it also illustrates something very important. So this is our bank account. Whenever we buy, we are crediting our bank account. When we credit our bank account, what is happening with our business bank account? It goes down through this arrow. Every time when you remove money within your business bank account, the bank account will go down with value. The money will go out from the business bank account. The business bank account will decrease, will go down with value. But when we receive money within our business bank account, our bank account will go up on the debit side. More money is coming in, but on this side, the credit side, less money within our business, the money is going out. This side, on the debit side, the money is coming in, and then the bank is going up, it is increasing with the money. But on our right hand side, which is the credit side, the money is going out from our business bank account. Now let us go and buy land and building on our credit side of our bank account. Land and building, what is it that we are going to be doing? We are going to credit our land and building with how much? 50,000 rand. Now after removing this 50,000 rand, a reason why are we removing 50,000 rand from our business bank account? Because we are purchasing or buying land. So the money is out. There must be a reason why the money is out, and then we must receive something. If you can check this arrow, we are now going to be debiting our non-current assets. We are receiving that particular land and building. These are the records that we are supposed to be recording within our business books. The business books. We are just recording on our debit side that indeed we have bought land and building that is worth 50,000 rand. Here is our land and building. You can see that our non-current asset account is growing very well, is going up. And now we already have a land and building within our business. Let us go and buy the second item, a laptop. Now we are going to be writing a laptop here. We are going to be writing a laptop. How much is our laptop? 5,900. So our bank account has decreased on the credit side. The money is flowing out from our business, and then once the money is flowing out from our business, there must be a reason why does the money is leaving our business. Is because we are buying a laptop. Now the money is out already. Let us go and record the laptop within our business books. Indeed, when we debit our non-current assets on our left hand side, on our debit side, we are going to be having a laptop within our business. Indeed, we have debited, and once we debit our non-current asset, it shows with an arrow we have a laptop. More laptop are increasing within our business. Which side? On the debit side of our non-current asset. Yes, we have debited our laptop account within our books. Indeed, now we have received that laptop. But on our asset account, the money is out. the money is flowing out for why? Because we are buying a laptop. Power. Let us go and buy another item. Let us go and buy another item. The third item, today we are going to be short. Straightforward to the correct answer. We are buying now a furniture. We have to come here and record furniture of how much? 13,600 rand. 13,600 rand. What is happening when we credit our bank account? When we credit our bank account, it means that we are losing money. How much? 13,600. For give us a reason why are we losing money within our business? Because we were purchasing or buying furniture. Now the money is out on the credit side of our business bank account, which is an asset. You can see the money is going down within the business. You can just see, I've even show you with a picture the value of money. The money is flowing out from our business on the credit side. But what is it that we are benefiting after losing the money? We are benefiting on our debit side of our asset account, specifically the non-current asset, which is the long-term asset. These are the assets that we are going to be using for a long period of time. We can use this building for 100 years. We can use this laptop for 5 or 6 years, even 10 years within our business. We can use even this furniture for 20 years. So the non-current assets, these are the assets of the business that can be used for a long period of time within the entity. Now, let us go and debit our non-current asset, which is our furniture. You can also see the picture here. We have a furniture within our business that is worth 13,600 rand. You can see through the arrow, more furniture is increasing within our business. Power. Now let us go and record the last one. Now let us go and buy vehicle, which is one of the non-current assets that we are going to be having in order for us to make an income or generate more income within our business. What is it that we are buying? We are buying vehicle. We are buying vehicle in a form of truck that is worth, the vehicle worth 78,000. A vehicle that is worth 78,000. Now, when we credit our bank account, with vehicle, it means that we have lost 78,000. For what reason? We were buying a vehicle in a form of truck. A vehicle in a form of truck. The name of that particular vehicle that we are buying is a truck. Now you can see that 78,000 rent is out from our business bank account, which side? On the credit side. And then you can also see with the arrow, the money is going down within our business. But please do not forget that when we receive money within our business, our bank account will be debited. And once our bank account is being debited, the money will go up. More money will be coming in within our business. Money is flowing in. But on this side, up until this side, the credit side, the money is flowing out from our business. The money is coming out from our business bank account. But on this side, up until here, the debit side, which is our left-hand side, the money is coming inside within our business. So on our next video, we will be concentrating on selling the same non-current assets. We are going to be taking some of this asset, all of them, and then we are going to be selling them. So when we are going to be selling this asset, I'm going to tell you what is it that we are going to be doing. However, let me just enlighten you a bit. When we are going to be selling this asset, we are going to be recording them this side. Now, once we record them this side, it means they are flowing out from our business, and then we have to receive money. But by receiving money, I won't disclose that part. I'm going to disclose everything on our next video. Now, if you can check, I've already written all the accounts that has this decreased our business bank account. And then for more information, whenever we make a payment, we are going to be making a payment on cash receipt journal. On our the credit side, we are going to be recording the cash receipt journal, because not the cash receipt journal, sorry, the cash payment journal. The cash payment journal on our credit side of our bank account. This side, we are going to be using a book called cash payment journal. But on our debit side, which is our left hand side, which book are we going to be using when we receive money within our business? We are going to be using another book which has been known as the cash receipt journal. The word receipt, it shows that we are receiving, and the word payment on our right hand side, which is the credit side of our bank account, the word payment, it shows that the money is flowing out from our business bank account. So thank you very much. This video was just short and straightforward. As you are going to be subscribing into our channel, you are going to be benefiting on our next video. Thank you very much. Remember, student accounting, it's a module that you need to practice each and every day. As I usually say, in order for you to become an accounting shining star, you need to practice and practice and practice and practice and practice. By so doing, you will become what we call an accounting shining star. I thank you.